We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily real estate investing podcast and YouTube channel. I'm here today with Tim Kelly from Active Duty Passive Income. And we were just sitting here chatting about all of the different guys that they have at Active Duty Passive Income. And man, they have a slew of them. So Tim, welcome to the show. And I can't wait to learn more about what you all do and how you do it.
What's up, Casey? Man, it's a pleasure. I appreciate you having me on your show, man. This is cool.
Absolutely, brother. We're always glad to give back and find out what people did to get started in the business and how they got to where they are today. So why don't you tell us a little bit about yourself, where you come from, your backstory, and then how you got started in the real estate business?
Yeah, of course, man. My pleasure. I appreciate it. So, name is Tim Kelly. I currently reside in Pensacola, Florida.
Oh, what a shame.
Yeah, man.
So
I mean,
sorry.
I'm looking right now. The beach is literally right there. It's amazing here. And people are sleeping on the white sand and emerald water here in the Panhandle.
Stop
People
it.
just talk about the hurricanes, and it's funny because it's actually storming right now as we speak. But yeah, man, the Navy brought me here. I was served in the Navy for 15 and a half years, man. I'm just a simpleton from right outside of Chicago. Arlington Heights is the suburb. It's a northwest suburb of Chicago. All my family still resides there. My mom, brother, sister's just north of there in Brookfield, Wisconsin. But from the suburbs of Chicago, man, I just didn't really know what the heck to do after high school. I just went to college, and it just wasn't for me. I just partied. I dropped out of college. I was playing music for a couple years. I've been drumming all my life. I still fortunately get to drum today, and people pay me to listen to me drum with my band members. And I didn't have any direction. So I ended up trying to join the Marines. That didn't work out because I had a couple things on my record, and I had like a pending court date on my record for a speeding ticket. And I was going to join the Marines with my buddy, and he ended up going, but the Marines said no. But next door, I went to the Navy recruiter, and they said yes. So I joined the Navy when I was 21, man, and left Chicago when I was 21 years old. I ended up going to the Norfolk, Virginia Beach area. I was stationed there for like 11 years on 3 different ships. I went all over the world on a bunch of different ships, the big decks, the aircraft carriers, and then the big amphibious assault ship. So I was stationed there in Virginia Beach area, and on a long deployment in 2014, I had just finished my degree. The Navy paid for my bachelor's degree, and I had just had a bunch of books on that deployment because you need something to do on long deployments when you're stuck in the water for 9 months, right? And so I always had an interest in personal finance and building wealth and just how people that get rich. And so I just read a bunch of books on money, and I just kept seeing a trend of real estate investing. This real estate investing, that this is how people can, create wealth and passive income, and anybody can get into it. You don't need a license. You don't need to be super wealthy in order to do it. So I'm like, I had all these aha moments. And as soon as I got off that deployment in early 2015, I literally just immersed myself. I made the decision just to educate myself and go really horizontal in all the different ways that you make money in real estate. So I learned a little bit about, single family, flipping, the BRRRR strategy, small multifamily, commercial multifamily, large multifamily, different creative strategies. And I didn't really get any traction because I paid for a lot of education, paid for mentorship, was going to the RIA meetings, was listening to the podcast, doing all the books, but I wasn't getting any traction because I was going horizontal. And then I chose one asset class and strategy and went vertical. And that's where I became somewhat of an expert. I was able to develop expertise. I was able to speak the language. And that's when I just decided large commercial and multifamily apartment complexes, mobile home park storage, and stuff like that made the most sense to me from what I read, what I gathered, people I was hanging out with. So that's when I started to get traction and developing expertise. I made that choice. So I was able to speak the language to investors, to brokers, to property managers, and people in the business took me seriously just because I was able to talk about that, because I just educated myself. I paid for education, read a ton of books, and I said no to wholesaling books, no to flipping books, no to single family residential.
Sure.
I said yes to, and I drilled down in commercial multifamily. And then, I was able to just get a couple deals done. I moved here to Pensacola in early 2017. I had already decided to do commercial multifamily. And as soon as I got orders, I was about like 7 or 8 months out from transitioning to Pensacola, Florida. So I got orders. I knew I was headed here. And that's when I leveraged the internet, leveraged different platforms to connect with people who are already investing in commercial multifamily in Pensacola, connecting with agents, connecting with people, just networking. So by the time I got here, I already somewhat had a network, and people kind of already knew who I was and what I was doing. And I literally got here, and the first month that I got here, I closed on just a fourplex that I just wanted a house hack. Love the house hacking strategy. Big fan of that. Used a 203K FHA loan to buy that thing. It's been cash flowing.
Man, you're one of the few people I've ever met that actually succeeded at getting the 203K.
Yeah. Yeah. And I can get into that.
Man, that
The VA offers the same thing, the VA rehab loan, where it's 0% down, dude. And I bought a triplex with that. But so I got that fourplex. 6 months later, I ended up buying a 42 unit apartment complex, syndicated it with some friends that I met and some people that I was just integrating with at the local RIA. Yes, that's actually where you could find investors and partners. Not everybody that goes to those things are flippers and kicking the tires. And then 6 months after that, bought at a mobile home community with some friends, and then I just dove and honed in on commercial multifamily. And then I was fortunate enough to be on the Bigger Pockets podcast back in 2018, where I shared my story, gave out my cell phone number, and then the co-founder at the time of Active Duty Passive Income, Eric Upchurch, he heard me on the podcast, immediately called me. And since then, I've been a co-owner and the VP of education for this incredible platform and military investing community called Active Duty Passive Income, where we're just helping other military members achieve financial freedom by owning more of America and owning more land that they fight so hard for and that they swore to protect. And we have all kinds of stuff going on in that community at this point, but education is at our core. So that's a little bit about what I got going on, man. But I got out of the Navy because of real estate, because of ADPI. I served 15 and a half years, and I ended up just enjoying financial freedom and serving other people in our community more than being on a deployment in the middle of the Persian Gulf right now or something if I would have stayed in, so.
Sure. Yeah. Well, I guess first off, as per usual on our show, we want to thank you and everybody at Active Duty Passive Income for your service. And because without you all, we would have no opportunity at all, because, it doesn't take long. Just a very few minutes of watching the news, and you can see what the alternative is if we didn't have you all standing up and fighting for our rights and fighting for this great country. But thank you so much for your service, and again, as well as everybody at Active Duty Passive Income. But a couple of different things, and again, I always try to discuss maybe my experiences or what I know about, like, so for instance, the Pensacola area, I've actually got a personal friend that was in the Navy that was his first purchase, was just a single family residence down there in Pensacola with a VA loan. And it's probably, and when I say that, it's probably been, he's older gentleman, so it's probably been 30 years ago, maybe, when he did that. Right. And he just still owns it to this day and just rents it out. And he said the Navy basically keeps them full all the time. And I think that it really kept them full even when we were at war, because it seemed like the Navy had a little different, because we're used to Army up here, and Army is either all here or all gone. And it seemed like the Navy had a little different rotation. And again, I don't want to get too caught up in the weeds of talking about just that particular market, but I think a lot of guys down there, when they get off those boats, I mean, they just end up staying because they're like, just like yourself, they're like, damn, this is I can get used to this, it's just beautiful. And so, but what an interesting story. So I want to go back in your story just a little bit, because with our audience, there's so many potential beginning investors, and even people that have done a couple deals may be interested in knowing more about your 42 unit purchase. and you just kind of breezed through that. You're like, I syndicated it with a few friends, but I'd like to dig in on that just a little bit, because again, the person out there that's saying like, man, how do I get my first deal? How do I find my first deal that I can syndicate? Obviously, you have some expertise in that area, so tell us a little bit about how you found the deal, or where the deal came from, how you obtained the balance of the financing for after the raising of the capital, and then who raised, or who invested with you, and how much, or whatever the
Yeah,
case
man.
was.
I love sharing the story because I mean it really drives home what it takes, and it's not difficult. I mean, you could probably tell I'm just a simpleton from Chicago. Like I said before, I'm not special. I'm not super intelligent. It really kind of boils down to what we actually talk about all the time in the active duty passive income community: learn, network, add value, take action every day. That's really the recipe. So I'll break that down a little bit. And kind of going back when I shared, like making the decision to hone in and drill down my focus to commercial and multifamily. So like I went horizontal and I couldn't get any traction because I was learning a little bit about wholesaling, learning a little bit about single family, learning a little bit about flipping, all the different strategies. And I mean, when you're first diving in, it's overwhelming, dude. It's like a fire hose of information, especially if you're
A
not like
lot of
with
information out
guided,
there.
you're not going through a guided course or lessons. So you got to be disciplined enough to get to know all these different asset classes just enough so you could choose one and say no to everything else. That's really number one. You
Yep.
have to develop expertise so you could speak the language, because the next step is network.
Yep.
So learn, network, and take action, right? So you learn one specific asset class and strategy. So then when you go speak to brokers and you say, this is my criteria, I'm looking for an apartment community in a secondary, tertiary market that's in a predictable path of progress, that I can get for 65% LTV, that I'm looking to add value to, I'm looking to say, like, where you could actually talk about these terms, not advanced stuff, but you sound like you know what you're talking about.
Well, the beginnings of that is just getting the broker to even listen to what you have to say. Like getting beyond a hello or hi, how are you, with a lot of these guys, is they're like, hey, so you go in and you start slamming those terms in and be like, hey man, I'm looking for, like, exactly what you just said. Hey, I'm looking for a 40 to 50 unit apartment building, and you start talking that language. Man, they're like, wait a minute, this guy
Yeah.
knows what he's talking
Even
about. I'm
without any
gonna,
experience, dude. Like
because
you don't need a ton of experience for brokers to take you seriously. You have to have a poise
that's right.
and a confidence, where your body language says, "Look, I know what I'm talking about. I have the capacity to close." Even if you don't know where the money's coming from, you don't know where where you're gonna raise it from, or like really who's gonna bring the equity. But you have to know enough about your team and about who you're bringing in on your team to have the confidence to at least have that energy kind of come off you when you're chatting with brokers. So like the very first thing, you have to just be educated and develop expertise. And whether you actually go through a no shit course where you're going through a course, you're in a mentorship program, you're part of a mastermind, that's why ADPI is that's really what we focus on, what we do. But there's like a number of books. You could literally listen to a handful of podcasts, listen to a bunch of YouTube videos, read a handful of books, and have enough knowledge easily to go out and network with individuals and share exactly your elevator pitch. And that's when you network, you have to intentionally network. So when you develop your elevator pitch, I'm talking about 15 to 20 seconds where I say, hey, yo, Casey, who are you? What do you do? You can come back and say, this is who I am. This is what I do. This is what I specialize in and add value, and this is what I'm looking for. And again, very simple. You don't have to have advanced terminology. It's just being able to articulate exactly who you are, what you do, how you add value to people or to teams, and what you're looking for. And so
Yep.
learning, step one, educating yourself and drilling down, having that expertise without even any experience. You just need the knowledge, right? And then when you go network, share knowledge, but get to know everybody around you and what they're up to. Get to know what I call their Ford, right? Or frog. The Ford is family, occupation, recreation, and dreams. You're just interested in all the people that you network with. Get to know them personally, right?
Yep.
Cool. Tell me about your family. Where are you from? What do you do professionally? How, what is your level of interest in real estate? Have you considered getting in real estate? It's easy. If you're at a real estate meetup or a real estate conference, there's a really good chance they're there because they're looking to meet people like you, right? If you go like to a restaurant or some random like entrepreneur meetup, or some mall, or you're at like a music venue or something like that, you could strike up a conversation with everybody. Like, everybody should literally know exactly who you are, what you do, what you're looking for, and how you add value to people. And so it's different when you're talking to those people. You could just say, hey, have you ever considered getting involved in real estate investing? And just ask really good questions. Get to know the people that you're around. And then once you're curious about them, you're interested in them, they're going to want to know about you. They're going to be like, well, tell me about you. What's your story? This is where you come back and say something along the lines of, hey, my name is Tim. My partners and I syndicate and invest in commercial and multifamily properties, emphasizing and focusing on apartment complexes, mobile home parks, storage facilities, and RV parks in markets that show a predictable path of progress. And we love giving our investors double-digit returns. We're always looking for partners. We're always looking for deals, and we're always looking for capital investors. How could we collaborate? Or what are your thoughts on that? Or tell me a little bit about you. And none of that was difficult. None of that was like advanced terminology. It's just being crystal clear on being able to explain who you are, what you do when you network, and being very intentional and taking action, after that.
Yeah. And some of that, and making yourself memorable, like making people remember, hey, yeah, I remember that guy. I remember Tim. I talked to him the other day at this meetup or whatever. And no, man, all good points. One thing I want to go back to
like,
here in just a minute.
How did that all work? Yeah.
Well, yeah, I want to go back to that, but I also want to put a little, just a little blip here, because I want to talk about predictable path of progress later on. So just remember that. Let's go and let's finish up on that deal.
So like I said, like I got orders to Pensacola. I was living in Virginia Beach. I was stationed there on a ship, and I got orders here. And I started networking with people. And at that point, I already had made that decision. Commercial multifamily is all I'm paying attention to. Any book I read, that's what it was about. Any podcast I listened to, that was about. Any conversation I had with people, that's who I was. Like, I made myself believe I am a commercial multifamily investor before I had any experience. So like, I had that faith and that confidence, and it vibrates off of you even if you have no experience. So I was telling people, that's what I'm focused on. That's what I'm looking to do. And that's what I'm developing expertise on. So I already had some people in the area that knew that I was coming, knew I was in the Navy, about to be stationed there. And so the minute I got there, I literally joined the local RIA, right? And I like the week I got here, I went out to lunch with a couple people I've met off Bigger Pockets, and one of them was a broker. One of them was another investor, my partner, my previous partner, Jay Helms. So him and I kind of just synced up. He was like more of the analytical, left brain deal analyzer, kind of the mathematician guy. And I'm the opposite. I'm the right brain, more of like, obviously doing these podcasts, promoting, and more of the visionary, long-term, kind of just, and a left brain and a right brain make a really good partnership. And that's actually what we dove into on the Bigger Pockets podcast, was how to establish a perfect partnership. And so we just meshed really well together. And so we just literally made a plan. Let's create exactly crystal clear criteria. Let's contact every broker we know that's in like a 200-mile radius, that has access to apartment complexes within like 200-mile radius. So that's what we did. We made a plan. We reached out to a bunch of brokers. We were telling them what our criteria was. At that point, it was, anywhere from like 30 to 50 to 60 units. And we found a deal just north of Mobile, Alabama, which is like less than 2 hours west. I'm like right on the border. I live in Perdido Key, and I don't know if you're familiar. Like the Floribama is like a couple miles that way, dude. So Alabama's right there.
Yeah, I know exactly
dude,
where you're talking
great
about.
Spot, but you go north, and that's Mobile. And so Citronelle, Alabama was actually the city where we bought our first apartment complex. And so me and my partner Jay, we found that deal through a broker, and then we didn't know how to close it. Right? We're like, all right, we have to go under contract. What are we going to do now? Like, we think we could raise some money. We had some cash to bring in, but we needed to bring like, I don't know, like 400 or 500K to the table in order to close it. And yeah, at that time, we literally got 42 units in Alabama for 700K. And so we ended up wrapping about 200 or 300K into the deal for rehab. So total purchase price was just over $1 million. We had to raise like 450. And so we brought it to the local RIA, and every time the RIA was going down every single month, the founder and the president of the local RIA allowed anybody to get up to the front of the room and say a 30-second commercial. I just gave you guys my 15 to 20-second elevator pitch. I said that exact same thing every single time. So every single time he's like, hey, if you want to do your commercial, go to the side of the room. You literally just, a line of people just would grab the mic. Hey, my name is Tim Kelly. My partners and I invested in syndicate multifamily deal, blah, blah, blah. And so I just said that every time religiously. And then the founder, the CEO, or the founder of and the president of the RIA, not many people do that. And not many people were focused on commercial multifamily. So he connected me with the guys that he knew who were already doing deals, right? So at that point, he connected Jay and I. We had this awesome deal, and we sat with these two other partners who had just done a 60-unit deal in Mobile. They had other commercial properties, also military guys. One was Navy, one was a Marine. And so they connected us. That was the partnership right there. And that that's how it was created. They were able to bring some capital. And within that RIA, we laid like 90% of the capital that had to get put down for equity that we had to raise to close. It ended up being a JV. It should have been a 506B. It ended up being a JV. But all that money was brought together mostly from that local RIA right here in Pensacola.
You keep saying RIA. Explain that
every
for the
city
listeners
most likely has a RIA, Real Estate Investment Association, REIA. That is where people who are like-minded, who are looking to learn about real estate, already doing real estate, looking to network with others in real estate, that's where they go hang out. Look up on meetup.com or the Google local real estate investment association in your area, show up. Usually the first one is free, and it's worth the $30-$40 a month just to stay connected. There's probably a Facebook group. That's where you find people in your immediate area that are serious. And again, keep in mind, a lot of the people are going to be kicking tires because they realize, what, this takes some work. I can't just get rich overnight. Oh, okay, this is not for me, you know? So if you actually go network with people who are willing to, like, most people in that room are literally just looking for the same thing you are. If you're serious, you're committed, you want to learn, you already know your criteria, you want to find other people, partners, investors, property managers, of course, vendors, landscapers, attorneys, CPAs, they all show up because that's their clients, right? So that's where you go. The local RIA is where I was part of one in Virginia Beach when I left. The minute I got here, I joined this one because it's the quickest way to find the people that where you live who are also real estate investors. So yeah.
Yep. Now, let me look here. I was just typing in RIA there, so because I wanted to make sure I got that down to be able to put in the show notes for people, because you're exactly right. When you start meshing and getting in with these people that are like-minded, like-minded doesn't necessarily have to be looking to invest in multifamily real estate. I'm talking about like-minded, like even as general as entrepreneurs, or just in general, just entrepreneurial type people that wanted to level up every day, that they get up. That's what we're talking about.
Growth-minded.
With all of that being said,
absolutely.
Yeah, growth minded. Yeah, that's a good way to put it. I mean, growth, people that just want to grow. And I was playing chess with my daughter the other night, and she's just learning how to play chess. And she said, I wonder, what's the point, Dad? And I said, honey, it's not necessarily even about winning or losing. I said, chess is a game that stretches your mind, that makes you think. You're having to think 2 or 3 moves ahead while making this move. And it's the same scenario. And once you start surrounding yourself with people like that, man, I've noticed it in my life. When you start cutting out the people that are just wanderers, I guess, if you will, people that just, and I don't mean to like segment that mark like a wanderer, because I know a lot of wanderers that are in my immediate family, people that I don't necessarily hang out with, but the people that once you get in that room with those like-minded people, it just changes everything. Like it changes your entire vision for everything changes. And then you start wanting to be more successful than them, or you start figuring out your place. Now, so you raised 750,000 or
purchase price
700,000. What
for
was that?
pretty distressed 42 units. It was like half occupied, needed a ton of rehab. It was about 700K. And then we put I think we put about 300K or a little bit more as just CapEx. Yeah, CapEx.
Okay. All right. So
yeah,
so $1 million
yeah.
total. You raised
roughly.
you raised 450, and then so you had to borrow 550, right? All right. How did you go about getting that 550 borrowed? Were you and another general partner stout enough to just go in and say, hey, we want to do this. This is our down payment. Can you make us this loan? To just like a local bank, or how? What did that look like? I think a lot of people get hung up on that. They're like, "Oh, hey, cool. I got friends. I can go raise $300,000. But then if I'm buying $1.5 million piece of property and I got my 20% down, where do I go to get
this is how it was done, and this is how you could do it too. It was done through a local bank, and our other partners already actually had the financing relationship, so they already they've already done like a deal or two with the local lender. So they already had all their information. They already had their balance sheets and their personal financial statements in order to secure the non-recourse loan that was needed for this small, like,
wow, it was non-recourse.
No, I'm sorry. Level. That specific one was a recourse loan. Usually, if it's less than $1 million, I'm sorry, I definitely misspoke.
Yeah.
That's what I thought. Usually it's recourse, where there's recourse. If the loan defaults, there's recourse. That's why liquidity and assets and net worth have to be provided in order to close, the loan. So if the loan defaults, then they will go after the bank. There will be recourse on the borrowers. So they already had that relationship, but it's as simple as this. Like, if you're looking for financing, you number one have to have a personal financial statement put together. Like, if you don't know your net worth or even what net worth is, you got to do that. You have to get your financial foundation established first before you try to go take down large commercial multifamily deals. I obviously wrote a book on it, ADPI. We have a free resource called the Blueprint to Financial Success, and like there's all this cool stuff in there, like a workbook. But you have to understand your income and your expenses, and if there's a surplus or deficit, you have to understand your total assets minus your total liabilities, and that's your net worth. You actually have to be able to calculate that. Your actual personal credit score doesn't really matter on these types of commercial loans. Specifically, they'll probably pull it, but it doesn't impact it as much. But what does is your ability to share what the opportunity looks like and your ability to prove that you are an operator that could actually execute the business plan. So what does that mean? That means you just have to have a pitch deck or some kind of business plan operating memorandum pro forma to show the bank. You show up, you can go to like 4 or 5 different local banks, go straight to the VP of commercial lending. They're usually the decision maker in local banks. And you just present yourself professional. You show numbers, you show projections. This is why we like the deal. This is our business plan. This is our CapEx budget. This is what we're doing. This is why we're entitled to close. This is why we have the capacity to close and execute this business plan. And sometimes you just need what's called a KP, or a key principal, who actually has the balance sheet, right? Or the personal financial statement that could back it up, that can guarantee that recourse debt for you if you don't have the net worth or liquidity requirements from the lender. And that's why a lot of these deals, like smaller deals, you pool a couple people together. And if you have some cash, you could joint venture, together. You pool your resources together. You all pitch in and have an active role. Or you can create a 506B syndication where you raise funds through your fans and friends and family. 506B as in bros, right? Your friends and family that you already have an existing relationship with. And then you could raise capital. And then it's limited partners who are just your investors, and you're the general partner as the deal sponsor. So that if you're trying to get financing and you're struggling to get financing, but you could raise, so go to the banks, have this whole business plan, and ask them what are the requirements for liquidity, cash flow, net or liquidity, and net worth, in order to do this, to do this loan and to sign on this debt, and what are the terms, and get term sheets from like 4 or 5 different local lenders, and you're going to figure out which one makes sense. Like those are usually for these types of deals, the local banks are hungry for these assets. If you could prove to them that you could execute this business plan, because banks love to hold real estate just like us. That's why we like real estate. Banks like to add these deals to their portfolio. So it's about,
Yeah. Well, a lot of them, man, you go in there and you go down there and plump down a contract for $5 million, man, they're going to be like, that might be their lending capacity.
Local. Yeah. If it's that much, local
whatever,
banks, unless it's a bigger
it's tough
regional
sometimes,
institution, it's going to be, but it depends. It depends. I won't say the blanket statement for every single city, but go build relationships with the local bankers and look for the VP of commercial lending and just explain to them who you are, what you do. This is what your business plan is. You have your elevator pitch. You're professional. You get to know them. You get to know their Ford, their family, their recreation, how they got it. Do they invest in real estate? Do they want to be an investor in this deal? Just talk to them, just to know them personally. And that's how you build a rapport. That's how you build relationships. And it's all about that.
Yep. Because they end up being your biggest investor.
They got to go pitch the board. They're going to help you and sell it to the board of advisors of the bank, who will essentially make the decision whether or not to fund it.
That's right.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
That's right. That's right. So Tim, we're pushing towards the end of our time here, but I'd like for you I'd like to jump into that real quick, what I said earlier, and I can't remember the exact way you phrased.
The predictable path of progress for market research.
Correct. Yep. And what, give us a quick rundown of what that maybe definition is to you. And I think we all know, kind of have a general idea, but is there certain factors that you look for, or certain pinpoint things on charts that you look for to see if this market 100%. Is indeed what you think it is?
So I remember when I was first getting into investing, I had a mentor tell me and shared, it's like, hey, live where you want to live and invest where it makes sense, And that, to me, it was like an aha moment, because a lot of people think, and a lot of people do, like they think they have to invest locally where they're at so they can go see the property, touch it, feel it, inspect it.
Do you know how many people I've interviewed on this show that live in California?
Exactly.
And they're like, I'm not buying here.
Dude, exactly.
I'm not buying
live where you
want
to live, or live where you have to live for your job, or if you're in the military, wherever you're stationed. But invest where it makes sense. And it's like, well, how am I going to invest across the U.S. or whatever? Well, you learn how to do market research, and you can do a lot of market research using different websites and leveraging other people who are either there or who know the market, right? And it's all about building teams and building relationships with people who are there. But you can get a lot done from the back of a computer. And these are the big metrics that we look at whenever we are looking at properties. The most important things to me are population. Is it going up? Is it going down? Over the last 5 to 10 years, what is the trend in population? Are people coming to, are they migrating to that city, or are they migrating away? For instance, a lot of people in the Northeast and the Midwest, out West, they're migrating to Florida or Austin, Texas, or Colorado, the mountains, because it's just a lot. These are more desirable areas. So like looking for areas where people are coming to, like over the last, is the population growing, right? And of course, the other huge thing is employment sectors, right? There can't just be one or two very strong employment sectors, right? There's got to be government, healthcare, education, agriculture, tech. a very diverse mix of employers. Because if you have a huge employer, let's say there's a big military base in the area, and that's like 90% of your tenants in like a 100-unit apartment complex, but all of a sudden they shut down that base for whatever reason, that's like all your people. You know what I'm saying? That's all your, so you got, and are those sectors that make up the majority of the market, are they strong? Are they growing? And so employment sectors is huge, and just general population growth. And I really like looking at the median home price of the market as well. Usually for a lot of different cities, you got to look at like kind of the median income, and that's usually a ratio with the median, the home value. And based on the median income and the median home value, are homes affordable based on the income? And in most markets, if homes are like, 125K or less, if that's like the median home price, then a lot of people could afford that low mortgage payment. But if it's 150, 200 to 225, the rent is going to be more affordable for people than a mortgage payment, right? So it really depends. There is a ratio and a formula based on the median income versus the median home value. And looking at that, and if it's more affordable, and you want home prices to be high, because if you're buying affordable workforce housing, apartment complexes, mobile home parks, you want rent to be more affordable than a mortgage payment. So those are just a couple things that we like looking at.
Well, again, people want the value for their
Yeah.
money. I mean, that's the end of the day.
No,
At the end of the
absolutely,
day, that's
man.
what everybody's trading their money for value. So I love that affordability. And that could be the biggest insight to a market, that of anything you could do is the affordability. And I think there's an affordability, like an affordability index. And I've oftentimes said that that's exactly what it is, because ultimately people ask the question, why do interest rates change the housing market so much? And it's because that affordability index changes, right? So interest rate go up, affordability index comes down, and in relation to home prices come down, and in relation to multifamily complexes, multifamily prices come down. It all is relevant, and that one trigger is that interest rate and what it does to the affordability. But I love that when you start comparing, because that's going to give you a really good idea of where the value of your multifamily is coming from, because that's strictly based on the cap rate, right? You just, because value is cap rate, or is NOI divided by cap rate.
No, absolutely, man.
Rate.
And to that, like, people are saying like, the interest rates are going up, but dude, there's still transactions happening. We're under contract on a big deal. A lot of my buddies and friends and fellow investors, there's deals out there. There's so many deals out there. When interest rates go up, guess what? Sellers still want to sell. They're still motivated to sell. So cap rates go up right along with it, right? And you kind of need that 2 to maybe 3% arbitrage spread to probably be able to pay investors 18 to 20% IRR. If that's what your target is, that's usually a good rule of thumb. Whatever your interest rate is, there has to be a spread between your interest rate and your cap rate in order to see the returns. Very much a rule of thumb, but because interest rates are going up, that's why cap rates are going up in a lot of markets. But there's still tons of demand where there's low supply, so we don't see that in a lot of markets. But there's still transactions happening. Transaction volume hasn't really dropped, even in residential. Deals are still happening, and so people are just sitting on the sidelines because they don't feel like we're getting creative. But right now, it's almost a better opportunity because people are sitting on the sidelines and there's less competition. Cool, hang out, wait for this recession that we're in right now, that everybody's scared about. But it's there's always deals out there, man. There's always opportunities if you're looking in the right markets and buy it right.
That's right. All right. So we're getting close to the end of our time now. We're actually closer to the end of our time than we were before, but it's all right because I think we've brought a lot of value to the listeners, and I think we've left them with definitely a good way to at least look at things and get started, or a way to answer some of their questions, their initial questions anyway. So with that being said, Tim, I've got a couple of questions we ask every guest that comes on the show, and the first of those questions is, what is the best book that you have recently read or are currently reading?
So, man, the best book I've recently read, right now, I'm actually going through very slowly. One of my buddies, I'm a mastermind with him, Jason Juries. It's a Bigger Pockets book, Do the Impossible. It's just all about mindset. I'm a high performance coach. I'm a big time mindset advocate. It's really all about your mindset. We could talk for hours about it. Amazing book. He's also a performance coach, but there's so many books out there that are amazing. But that happens to be the one that I'm reading right now, Do the Impossible.
Awesome. Good deal. All right. Now I know this is could be an elaborate answer. This could be something very simple, but what is a dream vacation that you've either taken or hope to take? And I say elaborate because you've probably seen many corners of the earth that most of us will never see through your time in the service.
Yeah,
but what is a dream
that's a great
vacation
question,
you've
man.
taken or hope to take?
So I have been very fortunate to travel around the world, but like going on deployments on a Navy ship and like hanging out in the port with your buddies and people you work with for a couple of days is different than taking like an actual vacation or like a cruise around the world or something like that. But I think
Sure.
wife and I, there's a couple places really on the bucket list, and I think one of them is Machu Picchu in Peru. I think we were planning on going there before the pandemic. The pandemic hit, um, and then the other one, I still to this day I've never been to Hawaii. I know I would absolutely fall in love with it. Um, yeah, that's one place
Oh
that
wow.
I know my wife and I would absolutely love. But man, we were recently in Iceland, and a couple years ago saw
Yeah.
the Northern Lights, and saw a lot of cool places. We were just in Mexico, and
Man, that's
we're
cool. Yeah,
headed to
Iceland is
Colorado to
definitely.
hike in the wilderness next week.
Yeah, Iceland is on my is Yeah, I'd love to see. I love to see all those places, and my listeners know Colorado is where I was. I was born in Kentucky and grew up in Colorado, so yeah, I definitely feel you there on wanting to hit that up. So, all right, well, listen, Tim, how can the listeners reach out and get in touch with you if they've heard something they want to that resonated with them, or maybe they want to learn more about whatever, if they even learn more maybe about active duty passive
Yeah, man,
income?
past or
What's the
present,
best way for them to get in touch with you?
military, you gotta go. And if any of this is resonating with you, with the mindset stuff, the real estate stuff, if you're currently serving, if you've ever served, if you're a spouse, you're a family member, check out active duty passive income. Education is at our core. We have so many free resources. Our Facebook group, we're on track to hit about 100,000 members. This year, we have a best-selling book called Military House Hacking. It's right here. It's actually free on our website. My story's in there, and the other co-founder stories are in there. We have a podcast that's free. Check that out. A bunch of free resources on the website, even a freedom call with some of the founders of the company, even with me. And we have these academies and masterminds for people, whether they're trying to learn about single-family residential or commercial multifamily. There's tons of action takers in our huge community who speak the military language, who are getting after it and doing large deals or house hacking or using their VA loan. So check it out. Tons of resources there. We even have our own mortgage company where we're taking care of our brothers and sisters, not just pushing them over to like Veterans United or the people who call themselves VA loan experts. We're actually educating you from a place where we can speak your language and from an investing standpoint. And so we just launched a fund, API Capital. There's a lot going on where we lower the barrier of entry for members to invest in commercial real estate. ADPI Con is a huge conference we got coming up. So if you're passive present military, definitely check out Active Duty Passive Income. Man, the website, the Facebook group is a great place to start. Both LinkedIn, Instagram, at the Timothy Kelly, and then my website, thetimothykelly.com. And if this is something, if your ears are perking up or this is resonating with you or whatever, you want to chat, just shoot me a text and we'll schedule a call. We'll just hop on a call and I'll help you in any way that I can. And you could reach me and text me at 847-910-9666. 9161. Just let me know you're on Casey's show. And yeah, we'll just set up a call and I'll help you out. Whatever you got on your mind, man. Happy to chat with you.
Awesome. Awesome, man. Tim, thank you so much for taking the time out of your busy schedule to be with us today. And listeners, as always, please head down and leave us a review and leave us a 5-star review. Also, smash that subscribe button so that you can be notified when we release new content, new episodes, and you can hear more guests like Mr. Tim Kelly here, who brings so much value to our show and to the passive income business in general. So again, I want to thank everybody for your time today. Tim, especially thank you for your time and as well for your service. Please pass that along to the guys at Active Duty Passive Income for us here from Cashflow Pro. And thank you so much, everybody, for listening today. Thank you.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.